Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is the 29th of September. And today we're going to talk about canola and some of the concerns we are seeing on the technical side after some losses today. We're also going to talk about the USDA report that's due out tomorrow. So let's get right into it. Canola was down $9.40 today, up to 605.20. That did break below the previous low of 606 and a half. So we're going to talk a little bit about what that looks like on the charts here in a second. Minneapolis wheat was down 1.5 cents to 569 and a quarter. Kansas wheat, sorry, that was up 1.5 cents. Kansas wheat was up 2.75 cents to 508 and a quarter. Chicago wheat was down a quarter of a cent to 519 and a half. Soybeans saw 3.25 cents in losses, down to 1010 and a half. Now, corn was half a cent down at 421 and a half. Bean oil was down half a cent at 49.69. Canadian dollar up 13 points today, 71.84. Live cattle, feeder cattle saw some losses today, 233.83 on the live and 353.88 on the feeder cattle. All right, let's get into the canola market here. Canola did struggle today, as mentioned. It did break below some previous the previous resistance at where the lowest open and close was, but also some resistance as to where the overall low would have been, which would have been in here. That was 606.50. I believe. So we're now down below that 605.20. As you can see, we've continued to trade inside of this channel. So there are some downside targets that we want to look at here. We'll get into that in a second, but one of them on the nearby chart is kind of this 580, 590 range from a technical perspective, which might show some risk there. One thing where the canola market didn't take a lot of losses, although I think there was some aspect of this in there, is the soybean oil market did take some losses, as mentioned before. They're relatively minor, though. They didn't break into any new lows. So as a result, I don't think this was necessarily driven specifically by bean oil, although I'll talk about why that's interesting in a second as well. We did see some pretty deep losses in the rapeseed market in Europe today as well, which the two may be correlated or caused. There might be correlation and causation here between the rapeseed and the canola. The difficult thing is figuring out which one is which. We are in the throes of harvest here in Canada. There's a lot of harvest pressure going on. We could still be seeing some of that in the Europe region as well. So something to keep an eye on here. Both canola commodities did suffer some losses today. All right, got that frog in my throat. Let's move on to something interesting here. We did see some pretty big losses in the November Texas crude oil market today as well. Now, normally I would say this is important to canola if we would have seen a correlating loss in soybean oil. Now, we did see some losses in soybean oil, but as a result, I don't think that the crude oil is having a massive effect on the canola market, even though it could have had this market affected soybean oil and therefore canola. But that kind of all leads me to believe that we are still seeing some harvest pressure here in this market, and same in Europe. So I think we're still in the throes of harvest pressure here. Just to kind of illustrate here what that looks like for canola on the risk factor here. This is the nearby weekly. As you can see, very correlated channel here. There's that 580 type support that's holding right now. As you can see, that kind of channel moves deeper every day, but ultimately, we have some support down here at 550. So that's what we got to watch out for. I think it is possible now that we've seen this breakdown in technicals for this market to trade that low. I can't say with any degree of certainty that it will trade that low, but it definitely has the trappings of at least going down to 580. And then by that point, this channel will continue kind of lower. There may still be an opportunity here. 560 is not that far away, even with a couple more weeks of trade here. So that's something to be aware of, something to be concerned of. I know there's lots of farmers who are delivering and then looking to go long the market. So that's either using an OTC contract that allows for upside participation, or even using basis contracts and things like that. Those are pretty risky at this point in time. So I would make sure to talk through your advisor. So if you're using ICL as your advisory service, then That's great. We'll have those conversations with you. If not, kind of have some of those conversations with folks who are in the know. So, moving on now to not canola is soybeans. We have soybeans here, closing at 1010. As you can see, there's kind of been this consolidation, not only in the daily lows, just below 1010, but in this 10 to 15 area where the most of the daily trade has come in. It looks like the losses, particularly from the Argentina news, are priced in. It still feels a little heavy here, and I don't know how to explain that, but it does feel a little heavy. We do have a USDA report out tomorrow as well, which could create some volatility. We'll talk about that in a second. Spring wheat markets, I just put up spring wheat because the rest of the wheat markets are kind of in the same pattern, which is kind of in a basing or consolidative pattern around the 20-day moving average at this point in time. So nothing really super interesting happening here at this point in time. We are watching this previous low. If it does break below that, that would be a concern. All right, looking forward to tomorrow, U.S. grain stocks, USDA are going to be reporting grain stocks as of September 1st. The market is expecting 1.337, that's billion bushels of corn left out on September 1st. That is up from 1.325 from the last USDA report. Soybeans, 323 million bushels. That is down from 330 from the last USDA report, the USDA WASDE. And wheat is a little bit different because the carryout, the ending stocks number does not come in on September 1st. It comes in at the end of June. The beginning of June is the start of the crop year for wheat. So last year we saw 1.9 billion bushels of wheat at this point in time in stocks. This year they're predicting a little over 2. So not a huge amount of difference there, but just something to keep an eye on. We did see some commentary from Zaner Ag Hedge today. And Karen Braun puts this stuff together. And this is where the September 1st U.S. corn stocks landed relative to the September estimate of ending stocks. So as you can see, of the last 6 years, let's call it, the grain stocks for corn were lower in the stocks report that's happening tomorrow than they were in the last September USDA WASDE report. So that's something to consider. It's a little bit on the opposite side for soybeans. So in this stocks report, or the last few stocks reports, we've generally seen the USDA report higher stocks for soybeans than what was last reported in the USDA report. So what would that suggest? Generally, that suggests that this report, based on those historical last few years, should be bullish for corn and bearish for soybeans. Not saying that the market hasn't priced that in or anything. I'm just saying that the numbers would suggest that. So just be aware of that going into tomorrow. All right, tomorrow is National Day for Truth and Reconciliation here in Canada, which means my kids are off school. I will be taking most of the day off. I think we'll send a morning update and to our consulting clients here. We probably, if there's some major fireworks after the USDA report, I'll probably send a couple of notes on that as well. But you won't be seeing a video from us tomorrow. So we hope you have a great day tomorrow, and we'll see you again on Wednesday.